welcome back everyone. This is our Gold Weekly Review. My name is Angelos Zitis. This week's title, It Isn't Over Until It's Over. Gold continued its downward movement yesterday, testing new yearly lows. Despite the ongoing uncertainty and increased economic risks around the world, which one would expect to boost gold's price, instead, the precious metal has moved lower. This report aims to explain some of the most important drivers of gold's price at the moment and add to those our personal opinion. At the end of the report, we will also provide possible upcoming moving events that could move gold's price and a final conclusion as to what the general market sentiment is currently. Many analysts believe gold's price drop is a result of investors simply removing their long positions. Cashing out of the financial markets has been a strategy that was implemented long before the current crisis. Investors either retrieve cash from gold positions or physical gold demand and invest in other assets, or just keep cash aside. Keeping cash aside could be a smart move for investors as it gives you flexibility that may be appropriate at this specific point. The general sell-off of the financial markets could provide many unpredicted opportunities, and investors could be in search of these kind of circumstances by holding cash. Another factor that should have kept gold's price somewhat higher was the surprise 100 basis points rate cut by the US Federal Reserve during the past weekend. The urgency of the sudden rate cut by the Fed has not been directly explained, yet it indicates that certain financial risks could be ahead of us. Even though this gave reason for gold's price to open with an upward gap on Monday, traders did not follow the trend and instead sold the yellow metal, forcing it to head lower in the next hours. However, looking at the precious metals recent activity, March is the most active month so far in 2020 for the precious metal in both directions, up and down. On the 9th of March, gold rocketed to a 7-year high, briefly reaching $1,700. In the next 6 consecutive daily trading sessions, gold has fallen to consecutive new lows. Until the present moment, gold has already left behind $200 in value, which may have not been predicted from the most experienced portfolio managers, analysts, or even algorithms. This is exactly what gold is about, an instrument that makes huge unexpected moves with a lot of volatility, which enables it to move fast. Not many instruments can produce this kind of action, yet this cuts both ways. Some traders must have found it very difficult to close their long positions, as the news could have prompted them to do otherwise. Especially the rate cuts mentioned before support gold's price usually, while it weakens the greenback. However, this was not the case. Also, traders that would be interested of hedging some of their other activities and enjoying the selling momentum must be celebrating, as this could have provided significant gains, taking in mind all the selling in the past days. In any case, the upcoming FOMC meeting has been cancelled, unfortunately, as it could have provided further action for gold's price. Yet, some other financial releases from the US can do the trick in the coming days. On the 18th of March, we get the housing starts number, while on the 19th, we get the initial jobless claims and Philly Fed Business Index. Existing home sales from the US will also be released on Friday, the 20th of March. Any significant increase or decrease in the figures of the pre-mentioned releases could motivate gold traders. Also, other announcements on measures to shield against the spreading of the virus could be of interest, as some analysts believe that the economic measures taken so far by governments may not be producing the desired results or may take time to work. Let's not forget, most of the world is dealing with a situation not seen before. Moving now to our technical analysis, this is gold's daily chart. Now, our levels to the downside at the moment are first the S1 1451.30 line that was tested yesterday but not breached. Lower, we can see the S2, that's the 1400 round number level. We selected this level due to the fact that gold bears may be looking for round number levels as targets, while in the ultimate bearish movement, the S3 1342.10 line is also possible. Please note, we have chosen to spread our levels, as in the past days, the movements indicated that the market favors large momentums, and this may follow us in the next days. In an upward movement, the first level to be tested could be the R1 1516.60 line, while even higher, the precious metal could reach R2 1576.30 level. If the bulls decide to dominate, gold's price could even reach the R3 1634.10 line. Please note also the RSI indicator is currently running on the 30 level, confirming an oversold market. If you've heard something in this report that you found useful, make sure you apply it to your trading. That's the whole point. Thank you very much for your time. We will see you very soon.